The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the 17th day of July. Interesting. Oh, 17th day of July. I think I've just missed one of my family members' birthday dates. Oh, I better check that out. Okay, so the Dow is at this point up 14 at 25,080. The S&P is up 7 at 2,805. The E-mini right now, the S&P is up $10.50, way stronger than the cash. Very interesting because we had a Chapman wave trend gauge flashing on Friday. There was, in fact, over a 9-point rally from the lows after Friday's close going into Sunday night, and then the market turns around quite sharply. Sometimes there's a residual effect, and that's what we see now when the S&P E-mini has gone from the low today of 20. I remember writing that down when I sent out my my opening call, starting the charts early this morning. So 2807.2789.75 was the low. We're trading up very sharply at 2807. This is very important because we've made a leg C to the upside in the daily chart. What I've been saying is I'm not expecting a reversal just yet. The MACD is still increasing. It's expanding. The stochastic is at 93%. The Dow is in the same situation, S&P. I don't think we're going to make a top, at least not until a few days to come, if we'll talk about a couple of things at the same time, if certain factors are in place. So if there's a move above 2809 today, we go to 2809.25 in the E-mini. This is extended leg C. If you're looking at the 120-minute chart, and I showed this a very unusual chart that I showed my subscribers today, I also put it into the den. I showed that there was a Chapman wave cup and ladle. Let me make this expanded here. Chapman wave cup and ladle from the peak D 2797.75, 3 times hit high way back on the 10th of July, pulls back to 2765 in just 2 legs down. And then what it goes peak A, peak B, peak C. And remember, D is where we're always looking at it and saying, oh, okay, be careful. D is where the yellow light flashes. Well, it pulled back and then it ran up a little higher in a kind of almost like a cup and handle, goes to 2809, round number high, hits it twice, and then comes down to today's low. Was it today, the 17th? Yes, today's low of 2789.75. Now we've got this huge leg A to the upside. Will it fail? I'm not thinking it's going to fail. I think that there's still residual strength. All right, let's get out of that. Let's go to the nitty-gritties of the overall market. Get out of this 120-minute chart. There it is. Put it into the corner right here. It's now called the right side insert right there. There we go. So parameters to watch, obviously a pullback today going back under 2,800. Let's call it 2797 would be very negative. Well, short term, that is. The weekly chart is still looking very good in leg D. All right, here we go. INDU. Dow. Pulls back quite sharply for the Dow lately. It's just been on a tear to the upside. And right there, it extends leg C. That means in the Chapman wave methodology, even though you below the previous major high of 25,402 on the 12th of June in the daily chart, the little doji candle where we went short, and we still remain short. Monday, a week ago at the open, I should have said, let's hold that short and let's just buy a completely fresh new position. I just thought that it would be more like 3 to 5 days to the upside, and then we have another pullback. So this has continued a lot further in time and price than I anticipated, but it hasn't expanded to the point where it's in the 25,250s saying, hey, it's like a hop, skip, and a jump to try to test the all-time high. There we go. Parameters to watch, a close below 24,950 in the next 2 days would be quite negative on the shorter term. Weekly chart is in the same rectangle formation trading band and we'll have to watch that closely. And as I say, 25 250s on the upside, crack that, and you're going to be going quite a bit higher in the Dow. S&P, SPX.X, S&P right now has gone to a leg D. So now we have, this is going to be so, the market's always so interesting. I think that's why I've been fascinated trying to make a call on the Dow for the last umpteen decades, it feels like. All right, leg D, 2806.66 right now, up 8.23 after being much lower. Earlier today, it was down at 2789.24. Hey, this is a nice move to the upside. And leg D has extended. I can now get rid of this arch formation in the weekly. Why? Because it's broken key resistance levels. And yes, it could still be a failure pattern, but now I have to be on guard to say, hey, MACD and stochastic in the weekly chart are pretty darn good. Monthly chart is still good. Let's watch the parameters that I mentioned before. The QQQ NDX 100. Whoa, look at this. So Netflix comes out with perceived negative results, right? 55, almost 60 points down overnight, early this morning, and it drags the QQQ down. The Invesco, I always called it the power shares, now it's called the Invesco QQQ Trust Series. Leg E in the monthly, leg D extending in the daily at all-time highs. It is just off this 179.90 all-time high as we speak at 179.59. What a comeback. It goes down to 177.28. I have to tell you, this is exciting stuff. And it made the peak D, but the reason why I never got carried away, I said, oh my God, peak D, we're going to be going down sharply. Even when I saw the Netflix and Apple pulling back yesterday, I said, no, no, no. Look at the MACD, the moving average convergence divergence. Look at the stochastic at 95%. If you ignore a stochastic at 95% and holding flat, thinking you're going to get a great short, you got to use other techniques to really refine and define your parameters, because that to me is always a good bounce. And what I said, pullback should hit trampoline support for bounces to the upside. I wasn't sure if it would happen this quickly in the QQQs. This is nice action. Let's go to the IWM, which earlier today I'd said I think the IWM could lead while the Dow takes a bit of a breather. What it did earlier on, now the IWM Russell 2000 is up 0.60, Dow's up 0.09, this is up 0.36. The QQQ is up, where did it go? QQQ is up 0.22 and the S&P is up 0.27. So the IWM is acting okay. I want to see a little push higher, and then I think it's going to start getting a little more toppy. I'm watching the IWM because it landed on the way up. It could be telling us, be a little careful here, because there are signs that we're getting close to some kind of a reversal. How deep is the ocean? We don't know. So let's go to the AAC at GC, the continuous contract of gold, down 11. Oh my, I didn't even see that coming. So this is G/B in the daily. Wow, G/B in the daily at 12.28. Not a good sign. Silver is down. Let's get this before the break. Silver is down 17 cents. Oh, it looks terrible. And what is the dollar? The dollar, which we're still doing, 177 up 29 cents. I'll be right back. Basil Chapman, I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So the Dow's up 41, S&P's up 10 now. This is quite exciting, actually. And what it's saying is the market is ignoring all the noise from overseas. And now let's face it, Russia. An economic bellwether? No. A military bellwether? No. I mean, why are we wasting all this time talking about Russia? Talk about China. Talk about, an economic powerhouse. So I think that's what the market's saying is, ho-hum, just wake up and smell the roses. In the meantime, back at the ranch, let's do this. The dollar is holding very well. It's not fantastic because it's up a little bit. It's in a trading band. Weekly chart is still holding very strong. What's really important about this is that the monthly chart has given up pretty much nothing after this huge 1, 2, 3, 4-month rally. It's really a 5-month rally if you count the green bar that made the low of 88.25 back in February. And yet, look at this. It's just a little off the top of 95.53 of this particular move. We're at 94.84. I love this. This is really nice. We haven't taken any position off the dollar. We're still holding it long. What's really important about this is, look, EUR/USD turning down again. And what I'd said is that 200-period moving average of 1.174 is going to be very strong resistance unless it powers above it and goes to the 14-period moving average of 1.18. And here it is, 1.166. Look at the USD JPY. That was the euro dollar. Look at the Japanese yen at this particular point. This is the dollar yen currency pair. Look at this, a brand new leg to the upside. Is this F or is this a brand new B? Looks like a B, but I'm going to put F/B. There's nothing to do here. It's MACD is strong, stochastics 89%. Weekly is very strong. It has broken finally that very long-term downtrend. Now, I know some of you have spoken to me about this. You've been told that long-term trend lines, when they are pierced, it's a major thing. It's only a major thing if maybe 3 bars later, this is a monthly chart, it could be a 10-minute chart. If 3 bars later, you've come back, tested it successfully, and gone even higher. Just to break out once is just no good. Fact is 1, 2, 3, 4, 5, 6. There are 7 bars that touch this dashed downtrend line. This is the first bar, a big green bar, middle of the month. That's looking very good. MACD in the monthly chart is just about to cross positive. Got to wait for the month to end. Stochastics rallied very nicely, still weak at 47%. Hey, it's a start, and it's a good start. And it says the monthly chart might finally be in a case where it is becoming, daily has done its job, weekly is doing its job, monthly is finally participating in becoming part of the uphill climb. That's what you really want to see when you're looking at time frames. You remember my CD introducing the Chapman wave methodology? I talk about time frames, and that's really, this is 3 time frames. You want all 3, in this case, daily, weekly, monthly, to be in sync to the upside. It's getting there, isn't there yet, but it looks very good. Question about, let me do this right now. Crude oil, yep, crude oil had that big pullback, again, another 59 cents today. I think this is a peak E in the weekly, and we're testing the 200-period moving average and a leg D, excuse me, in the monthly chart. NAGD technicals look very weak. Let's see what the SCO is looking like. SCO, which is in leg B to the upside in the daily, and that is the inverse of crude oil. This is the ProShares ultra short Bloomberg crude, and it is saying that ultra short. Wait, SCO is ultra short Bloomberg crude. Ultra short, and crude oil's coming down. It's going up, of course. Got a little confused there for a minute. Yeah, this is looking like at 17.15, we could try to test the 18s. If it closes above 18.55 in the next few days, that's going to be very positive. So the question comes in, what about the XAL? Well, the XAL right now is up 76 cents. Leg B, oh, it looks like the crude oil chart here for a moment. Sorry, the inverse crude oil chart. Yeah, this is a leg B. It's starting to form a test after the 200-period moving average was hit. XAL is participating, but I would not call this bullish. I'd say short-term bullish. Weekly chart is just beginning an attempt to turn to the upside. Question about VZ, which is, now let's go to TLT first. TLT, oops, don't type it there, type it here. TLT, bonds, here we go. TLT is down 12 cents at 122.09 May. This is a high-level consolidation, and I think that's what you'll see in the yields. If you look at the TNX, which is the 10-year yield, it's trading unchanged at 28.58, stuck in a range towards the lower end of this trading band at 28.58. It looks to me like it actually wants to pull back a little more to the 28.32 area. We'll watch this closely. I think I've done that. VZ is a question. So VZ is trading up, recycled A, B, C, and this is now a D. So it's in leg D in the daily with very good technicals. Weekly chart has had a very nice turn to the upside. Oh, boy. I would love to say VZ Verizon at 51.87 is a great dividend stock. Buy it here because it's going to the 54, 55 area. It's at 51.86 right now. That would make a U-shaped pattern to the top. I just can't say that right now. I do like it, but I'm saying as a dividend stock. As a trade, I say, yeah, there's a good chance it's going to go a little higher as long as it holds 51 to 50 key support over the next week. But most importantly, as a dividend stock, is there a chance that it comes back and trades back in the 49 to 47 area? And I would have to say, yes, I think there is. So, yeah, I like it. If you're holding it, just keep holding it. Should I add to this? That's an instant restart. That should go to a D or an E. MACD's good. Should I add to it? Oh, I know what I could say to you. I'm going to say in your particular case, because you have a position, I'm going to say yes. You can add a small position right here at 51.86. On this position, give it a 2-point stop. But what I am going to say is if it hits 52.87, today's Tuesday, if it hits that before Friday or by Friday, just send me an email, do something, let me know. Why? Because that's where I want to reassess. Why? Because if it does that and you've got your position, I would try to see if it's possible to hold that position and think of adding yet another one. Why? Because if at 51.86 it manages to go over a point higher in this leg D, it could have high level consolidation because the weekly chart is starting to really get at 87% in the stochastic. It's starting to make I've got a visual in my mind. I don't know how to explain it. You know how the lung looks? It's got the lung pattern or the heart pattern. I don't know how to explain that in words here. You see this midpoint spike and retest of the low, making a new low, in fact? Well, that says to me that this could be a brand new move in a leg B to the upside. I don't want to ignore that. That's why I'm saying yes. Right here, add some, have about a 2-point stop, and just let me know how it's going. Dow's up 62, S&P's up 12. I'll be right back. Basil Chapman, Tiger Technicians Hour. We've got a lot of questions to get through. I want to look at the XBD, and we'll do that when we get back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just finish this up here. A, B, C. Yeah, I'm putting the notation in. Takes me another couple of minutes. Here we go. D, F. So this is a D. This is an E and this is an F. Okay, so I had a question about 10 cents, TCEHY is the symbol, trading at 48.44, unch right now. How can it be unch when it's green? Oh, because a gap down, now it's green. I think this, I'm pretty sure it's a peak F in the monthly chart. All-time high in this, just above 60, trading now at 48.85, having made a low in the 47s. Question is, Greg wants to know. Morning, Basil. I'm looking at starting a position in TCEHY. It has hit this 47.8 level several times and seems to be pretty decent support. What do you think? Thanks, Greg. So, Greg, I'm with you only in that you know exactly, it's like Larry Pesavento when he talks about it, he says, you know exactly where you want to cover or what you're looking for. You're at 48.45 right now. The low that was made of 47.61. So that's less than a point lower. I wouldn't go to 1 penny below because we've seen H patterns lately take out the left side low and then continue lower, or take out the left side low, close above it, and then start a lowercase h U-shaped turnaround. It inverts to a U-shape. So I'm going to say yes. I'm with you at 48.46. You probably, if you wanted to get in, you probably already got in. There's a slight positive divergence. That's mean nothing these days to some of these U-shaped patterns, the cup pattern included. I'm going to say yes. In your case, because you followed it closely, I'm going to say as a bounce. I don't see yet more than a bounce. In fact, I see a little bit of a risk. So that's why I'm saying to you, make it a small position. It's like it's a little bit more than a starter position. Because why? It's up 4 cents now as we speak. If by tomorrow it gaps up and it's in the 48.90s to the 49s, I'm not sure that that's where I really would like to start my position. I'd rather have it now, and if it gaps up, I can start thinking of adding. Why? Because if it gaps down, I know exactly where my stop is, but I'd like to be in it. So in your case, now, for anyone else listening, do a lot of thinking about this because the weekly chart is still very negative. The reason why I'm doing this, because it has a pattern that will help the weekly improve, but it obviously has to come from the shorter term, which is the which is the daily chart. 120-minute chart right now. This is a nice candle. Is this a kind of candle that would impress me to go long? Yeah, I think so. Right there at 48, now it's 51. Now it's up 7 cents. Yes, I'm saying to you, I would start the position, but I would not think of it as an intermediate term position. It could turn into that, but it's got a lot of work to do, not let alone get to the 55 major resistance, but even to get to the 50.80, 51.20 area. But if it does that, that's good. So next question I have is, here's a question. This is very interesting because I did this last week and I gave, so Robert wants to know, hi Basil, I wrote in last week inquiring about silver. I didn't buy SLV last week as I was thinking it would decline more, correct? With the declines this week, I'm thinking we may be near a bottom. I've been using the following indicators to help guide me. Channel Commodity Index, and let me go to the SLV. Look, here's the SLV. If you look deep down, you'll see I've got right there. There. You see this little gray line? Let me see. Can you see that? Yep, you can. So it's a little faint. But inside the MACD, there's volume, there's the histogram, there's the MACD2 moving averages, and within it, you can see right there, there's a dashed line. That's the CCI. I use it rarely, but every once in a while, it gives me a nice clue as it makes a turnaround a tad before. You look at that tad before. Big price, 1570s, eventually going to the 1620s. But in fact, it was a heads up to say the CCI is now turning down. Watch your slow stochastic and your MACD. And then that gave a beautiful inverted hammer right there, peak E at the top. That's SLV trading at 1469 down 16 cents. So that's the one. I do not use the ADX-DMS. That's the advanced decline indicator. Excuse me. Oh, I am coughing here. So, but you also use the stochastic, right? I've got the stochastic right there, and you can see it's dipping down. It's making a slightly positive divergence between the lower price and the slightly higher stochastic. On balance volume is what I love to use. Look at that great turn right there. Look at this. Right on the turn. You got the, people talk about moving averages as laggy indicators. I've done this for so long, and I've proved to them time and time and again, if you use your indicators correctly, especially if you use it with a Chapman wave notation, you can time it to the exact day. We picked the exact top to within fractions of the IWM top when we rode on the way down. Hopefully we can try to do that again in this particular move right now if there's another bounce. But yeah, you've got to use your indicators and get used to that. So I'm just going to say, Robert, get used to your indicators, but I don't use the ADX DMS. I found that I've got others that give me a much better set of parameters. So there's nothing wrong with it. I know people who use them and love it. So 2 questions. Are these good indicators to use when trading silver? Trading anything. Doesn't have to be just silver. Yeah, silver, look. Same thing in gold. Look at the GLD. Of course, I have to get the GLD. There, look at the GLD. Same thing. Commodity indicator gave you that reverse. See that gray line right there? That was that peak B minus top that failed. Yeah, so it works just as well with the, well, whatever it is. Just get used to using it. That's all. That's all I can say. So that's number one. Number two is, any new thoughts regarding silver given the recent decline in price? Thanks for taking my question, Robert. Robert, pleasure. So let me just say 2 things. You see gold right now, the depth of this move, when 2 days ago you already took out the lowercase h left side support of 1238.50 from back, I think it was the 2nd or so of July. Now look at this. You've gone to a G/B, the MACD's turned down, stochastic going even lower, 13%. I suspect the stochastic is going to have to go into the single digits before you get a pretty decent turn. And this is leg E extending in the weekly chart. And the monthly chart has broken key support. I'm just going to say to you, sorry, Robert, in the case of silver, I mentioned before when it was trading in the 14, I think it was like 14.94, now it's 14.70, that if you wanted to really get a feel for how it's corresponding to dollar and markets and everything, maybe take a little nibble, but you're watching it very closely. You don't have to take any position because I can see you've got your eye on this. I think you've got your eye on a prize, but it's not going to be until you really see that the dollar has taken out, now instead of being up 44 cents right now, 94.93, when you see the dollar break 93.50, getting close to the low 93s key support, I think that's when you're going to see gold move to the upside. Until then, just think it's stuck. I'll be right back. Basil Chapman, Dow is up 47, S&P's up 10. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let me just tell you, the E-mini right now, 5 minutes is at a peak E. For many of you noticed over the last many months that I've been using particular techniques that I've added to my plethora, to my umbrella of a multitude of Chapman Wave proprietary techniques. Not all of them are proprietary because I discussed them openly. But yes, the green, you see that green? This is something I've done for ages, where you can see that there is a turn down, it changes color, and turns up, it goes green. It's just nice. It's just one of the many techniques that I use. Is it foolproof? Of course it's not foolproof, but it's a nice thing to just make it clear for what I'm looking at. I don't have to discuss in too greater detail. So the E-minis reached the 28.11s, 28.12s that I said was the key resistance today. Will it break out? Well, the day's young. I think there are chances are that it could go a little higher even. But that's what I'd said in 27, what did I say? 87, I think it was. 97? Yeah, 92 to 87 was the support. What's the low of the day? 27.89. Okay, so what we're looking at here is the 5-minute chart. Now let's go back to the nitty-gritties. I also wanted to just take a moment here. I get questions all the time. I don't always remember to answer it. But in fact, this is our advertising time. This is the time that we should be using to be able to explain our products. And I'm going to start doing that a lot more during the show, because otherwise, what's the point? A lot of people want to know, what do you do? How are you doing it? Yes, we have good positions, mostly long positions. Now, what we're looking at is within the context of the markets. Let me show you something. So every day I send out, this is the 120-minute chart. No, this is the daily chart. And I explain the left side, right side time match that we had broken above. This is the cup-shaped pattern. There's the left side. There's the midpoint. All those things. There's the Chapman Wave inside wedge target line. And this one on the right has the same thing, except it's got the MACD, the moving average color. Look how strong that MACD was yesterday at the close. And look at this, at 93% in the stochastic. And I discussed it, and I said, still very strong move with no economic bad news, and just a modest rally from the Chapman Wave trend gauges Friday signal today. If at 12:35 p.m. Eastern Time, the Dow is minus 30s or more, there is a good chance of a peak C being formed today. But if there's a plus 15 or more at that time, it will be good action as just a brief modest pullback unfolds here. The strength in the MACD and stochastic should become a springboard for any weakness. Let's go to the real thing. The real thing says at this particular point, look at that. The Dow is up in a very strong leg C. The MACD is expanded even more, and the stochastic is now at 95%. That is really good. And in leg C says there should be a D still to come. All right, so that's just one of the things. And then I show my different charts and the different stocks, etc. What is this one here? Where is this? We did have one. Now, this is unfortunate. You know, it happens every once in a while. Here we are. We've got United Technologies in the 119s. It's trading at 130 right now. We've still got some left. We've taken some profits. But we also had a stock yesterday that I really have liked for a long time. We had it some time ago. And you remember, I have no problem here talking about my mistakes. If you can't talk about your mistakes, you aren't going to be able to learn, to be able to have the veracity and the strength to be able to hold those long positions and keep holding them through all these different vicissitudes of the market. So Carbonite, is a stock that we bought on a dip yesterday. We wanted it just above 38. It was trading higher than that. It gives us an entry point, a starter point. It wasn't the full position, it was just a starter point. And they have fabulous earnings. I thought their earnings should be good. You know, what the heck? Oh, but then what do? They announce a stock, a sale. No, they, what do they call it? Stock. A 4 million share common stock offering. So, of course, the stock dips. It drops sharply. If you had a stop in, you would have got stopped in. I had a 1 point stop, but it could have been more than that because it gapped down. I always take worst case scenario, so we took a loss in that position. But some people bought it, and they would only today, after kind of seeing how things stand, would start putting in stops. If that was the case, I said, look, it should be a positive. Carbonite is a great company, and they came out with really good earnings. So let's manage that. If you've got to manage the position, and I gave them a stop. Well, Carbonite right now is trading down 1.20 at 37.20. Hey, not a bad thing. I mean, that was the kind of parameter we were looking for. And that happens every once in a while. You know, you do your absolute best. Nobody would have known that they were going to make a stock. If they'd never made the stock offering, maybe it would have been good news is bad news type thing. It would have pulled back about a point. Chances are it would have actually popped up really nicely and been in the 39s. You can't help that. That's just the way the market works. We'll make that up. I know we will make it up. But for those who still have it, look, it's still, the weekly chart has pulled back because of this, but still it's acting very well. The monthly chart still looks good. So I wanted to explain, yep, we have good things, we have bad things. As I said, UTX, the question here is UTX. Bob wants to know XLR, UTX, Caterpillar, Boeing. So look, UTX, strong leg C, as we're talking, is at 130.41. We have a little position left. I wanted to add to it. I just wasn't sure this was the moment to add to it. And what happened was, look, it rallied, and in fact, it's become quite a bit of a leader in the Dow. It's really saying, hey, this market is doing pretty darn well at this particular point. So that's UTX. I don't follow the where did it go? The XLI all that closely. I should, because that is in fact the S&P Select Industrials. That's better than the Dow if you want to be selective, because that has just industrials. The Dow has a whole mix of financials, all sorts of things. So XLI is trading 73.68, up 23 cents. Yeah, it's looking okay. It's not looking great. It's looking just okay. But as I said, UTX is doing well. What is Caterpillar doing today? Is it up again? Yeah, up 81 cents. It's in this trading band in the lower range. I wouldn't be doing anything with Caterpillar at this particular point. Question, is the ESU 18? What is the question? Is this a breakout at resistance? No, it's still leg C to the upside. I think it's still going higher. How high? That's a little tough. I mean, at this point, wow, I've got to consider that there's a chance to go to the all-time high of 28.89. Round number high. It was made back on the 1st of February, 2nd of February. Right now, it's in leg C and it should go high. MACD and stochastic are good. It means that the whole 27.85 to 27.77 area is major support on any serious pullback. Next question is, okay, so the XLB. Is it XLB? XLB. Oh my. Expedia, of course. XBD brokerage dealer, broker dealer. So yeah, leg B to the upside, not bad. Weekly chart made that this is that lightning bolt, A to B equals C to D, and now it's bouncing off that. Monthly chart is D, weekly chart is peak F, made an arch formation. Oh, just a beautiful, beautiful pattern. Look at that. Beautiful lowercase h that took out the left side low. We've got one more segment to go to. I think it's important. We will do the XBD, which is the broker dealers. I'll be right back. Basil Chapman.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
I just wanted to follow up with Robert. I don't think I actually gave him the decision on the SLV. My decision on the SLV is really dependent on how the dollar does over the next few days. If it continues holding up here, I think you're going to have to wait a while longer for the SLV. But I'm watching it closely, and I'll mention when I'm thinking that the SLV becomes more of a position trade in the short term that will start off to become something longer. I don't think that's going to happen just yet. That's my thinking at this particular point. I had a comment made by GT. Where would you add to your short on the Dow? The Dow is in a buy mode in the daily. Yep, that's what I've said. And you were short this week and last. How do you make dollars? Well, in this particular position, we're still up, but it's not great. I made the mistake a week ago. I've said it many times that I should have just either bought a brand new position as a separate position long, because that's what I was looking at. I just didn't think it would last more than 3 to 4 sessions, and it has. So that says that was wrong thinking. So I wanted to clarify that. My position is that I don't think we're going to go to the old high that we made, the most recent high, and that's where I'll be switching to more of the short position. That's the thinking, and that's all you can do. Try to prepare for it. Let's go back to the XPD, which is the broker-dealer. Has a nice leg C to the upside today, coming off the 200-period exponential moving average. The weekly chart is really not a great pattern. The MACD is lousy. The stochastic's lousy. The monthly chart is still good. Not the stochastic. It's getting down at 79%, but the MACD is still good. It is pulling back, and it was a very ugly candle in the month of whatever that month was, June. So I'm looking at this, and I'm, looking at SCHW, Schwab. Is that up today? Up, yeah, 1.70. Nice big spike to upside, but giving quite a bit back. It's just not a great pattern yet, and that's why I'm thinking the big move is still to come, and then we will see the brokers like you've never seen the brokers act, and that I think is coming up in perhaps the end of the year, going into the end of the year. But I do see a huge move in the brokerage area, but I think the public has to be right in. So I hope that fulfills a lot of the requirements that we were looking for. Took a lot of questions today. Did I miss any IBM? Just as we're going out, IBM, what about IBM? Is it up today? No, it's down. I don't see anything in IBM at this point. Hey, stay tuned for Steve Rhodes. Stay tuned for Dave White and for Tom O'Brien. Have a great day. Check out my opening call.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.